About this channel disclaimer. The content provided on this channel is not financial advice and is for entertainment and educational purposes only. Please consult with a qualified financial advisor before making any financial decisions. Welcome. My name is Rees, and this is my channel Echo and Vision. If you're interested in 1. Earning more money. 2. Managing debt effectively. 3. Building passive income streams. 4. Investing. 5. Personal finance tips. Make sure to subscribe to the channel and hit the thumbs up button for support. All videos are animated by me under the Echo and Vision brand. My goal is to simplify complex financial topics, making them easy to understand and fun to watch. Note: there are countless ways to make money, and success depends on your skills, interests, and available resources. Stay tuned for actionable insights and engaging content to help you on your financial journey. 1. If you found this helpful, don't forget to hit the like button and subscribe for more tips. 1. Share this with a friend who's starting their investment journey. My investing mistakes. Learn from my errors. Investing is a learning process, and mistakes often pave the way to becoming a smarter investor. Here's a detailed breakdown of my biggest investing blunders and the lessons they taught me. 1. Chasing hype. 1. What happened? 1. I jumped into investments solely based on trends or social media buzz, like buying meme stocks or cryptocurrencies at their peak. 1. I didn't understand the underlying value of these assets. 2. The outcome. 2. I often bought high and sold low, leading to losses. 3. Lesson learned. 3. Research is critical. 3. Focus on understanding a company's fundamentals, market potential, and risks before investing. 3. Avoid herd mentality. 2. Ignoring diversification. 1. What happened? 1. I put most of my money into a single stock that seemed like a sure bet, ignoring the potential for unforeseen setbacks. 2. The outcome. 2. When the stock underperformed, my portfolio suffered significantly. 3. Lesson learned. 3. Diversify your investments across sectors, asset classes, and geographies. 3. A balanced portfolio minimizes risk while allowing growth. 3. Trying to time the market. 1. What happened? 1. I tried to predict market highs and lows, often waiting too long to invest or panicking and selling during dips. 2. The outcome. 2. I missed out on key growth periods and incurred losses from poorly timed trades. 3. Lesson learned. 3. Consistent, long-term investing through dollar-cost averaging is more reliable than attempting to outsmart the market. 4. Lacking a clear plan. 1. What happened? 1. I invested without defining my financial goals or understanding my risk tolerance. 1. I made random choices without a cohesive strategy. 2. The outcome. 2. My portfolio didn't align with my long-term needs, leading to confusion and inconsistent returns. 3. Lesson learned. 3. Set clear goals, e.g., retirement, buying a house, assess your risk tolerance, and create a strategy that aligns with your timeline. 5. Letting emotions dictate decisions. 1. What happened? 1. During market downturns, I panicked and sold investments to cut my losses, only to watch them recover later. 2. The outcome. 2. Emotional decisions led to unnecessary losses and missed growth opportunities. 3. Lesson learned. 3. Stay calm and focus on your long-term plan. 3. Market volatility is normal, and patience often pays off. 6. Overlooking fees and expenses. 1. What happened? 1. I chose mutual funds and trading platforms with high management fees and transaction costs, thinking they wouldn't impact my returns much. 2. The outcome. 2. Over time, these fees ate into my profits significantly. 3. Lesson learned. 3. Always compare fees and opt for low-cost index funds or ETFs. 3. Every percentage saved on fees boosts long-term returns. 7. Delaying my start. 1. What happened? 1. I procrastinated on investing because I felt I needed a large sum to begin or feared making mistakes. 2. The outcome. 2. I lost valuable time to grow my wealth through compound interest. 3. Lesson learned. 3. Start as early as possible, even with small amounts. 3. Time in the market is more important than timing the market. 8. Neglecting to reinvest dividends. 1. What happened? 1. I didn't reinvest dividends from stocks and ETFs, often using them for short-term expenses instead. 2. The outcome. 2. I missed out on the compounding effect of reinvesting dividends. 3. Lesson learned. 3. Automatically reinvest dividends to maximize compounding over time. 9. Ignoring tax implications. 1. What happened? 1. I sold assets without considering capital gains taxes or the tax efficiency of my accounts. 2. The outcome. 2. High tax bills reduced my overall returns. 3. Lesson learned. 3. Use tax-advantaged accounts like IRAs or TFSAs, and consider holding investments long-term to benefit from lower tax rates. 10. Underestimating the importance of education. 1. What happened? 1. I relied on advice from friends or trends instead of learning about investing myself. 2. The outcome. 2. I made uninformed decisions that didn't align with my financial goals. 3. Lesson learned. 3. Read books, take courses, and stay informed about market trends and strategies. 3. Knowledge is your best tool for success. Conclusion: these mistakes taught me valuable lessons about patience, research, and strategy. By sharing them, I hope to help you avoid similar pitfalls and make informed decisions in your investing journey. Start small, stay consistent, and keep learning. Success will follow. 1. If you found this helpful, don't forget to hit the like button and subscribe for more tips. 1. Share this with a friend who's starting their investment journey.